Here's 5 stocks I'm buying right now to make millionaires. These 5 stocks are buys based on my research, and I'm going to do some deep analysis on each and every single one of them. Make sure that you stick to the end of the video to check each and every single one out. Let's get started. Let's not waste any time. And let's start with the first one, which is Sweetgreens. Sweetgreens, I know, has had some disappointing results. Look, I get it, but there's still a lot of positives in the stock, and this is a long-term play for 2028, okay? Small amount of money, a little bit higher risk, very high return potential for 2028. It's a 3-year wait, basically. If you can't wait that long, that's fine. I have 4 other stocks that are going to have much faster results. Sweetgreens is a small, interesting play, and I'm putting it out on YouTube to give you that new and interesting insights that I have on a sector of the economy that I think is really good, which is the fast casual restaurant space. Chipotle, Cava, Sweetgreens are very good plays, but I'm going to only cover Sweetgreens. So look, the company is moving rapidly towards profitability, okay? With its automation-driven kitchen rollout, strong digital adoption, and expansion into new markets and dinner occasions, it's transforming into a scalable, tech-powered fast casual chain, well-positioned to outpace traditional casual dining, okay? That is the main reason that I'm personally bullish. Now, look, they reported earnings. They came in at $185.6 million, which was a very modest 0.5% increase from $184 million in Q2. Okay, so very little growth on the top end. Same store sales unfortunately fell 7.6%. And the revenue did miss. It fell short of analyst expectations of $193 million, which is only about $7 million off. And if you take that as a percentage, they missed by about 3%, okay? Not huge. Now look, here's what's coming for the stock. Here's why, now that it has sold off, it's presenting a really good opportunity. I mean, this stock's actually cheap. It's under, what is it? It's like under $10 per share. It's under $9 per share. It's at $8.98 right now. So if you can get in at these prices, if it goes to 11, 12, which it will eventually, right? Most likely, like 99%. So when it goes to $11, it's going to go up by 20% in your portfolio. So there's a lot of upside room that you can expect in the stock. And over the last 1 month, we're down, a lot. Again, this is a small portion of my portfolio. I really want to emphasize that because my portfolio is doing incredibly well overall. And Sweetgreens, personally for me, I'll show you how much it makes up of my portfolio. This is a small position I just started that I'm going to build. I'm happy to build more into it as the stock fell down. It makes up 0.18% of my portfolio, right? So I got 1,000 shares here, 9K, nothing crazy at all. But here's the strategic response that the company had and why I think this is a top 5 investment that I would be making right now. They decided to boost chicken and tofu portions by 25%, which is nice. Everyone wants that protein. We all know that protein is very expensive. So them boosting that by 25%, it will likely lure some customers back in the door and get some more repeat business. Now, they also enhanced the quality of chicken and salmon offerings, which is great. They introduced a $13 salad for loyalty members, and they phased out ripple fries due to operational complexity. All right, so it's all about, right now, even the salad company, right, is going towards automation, AI, and simplicity and operational excellence, right, versus complexity. And I'll talk about how they hired a COO in just a moment. But they have a new menu with items like homemade drinks, which is cool. And basically they're looking to solve a lot of their margin pressure by reducing waste and cost, right? Now, here's like the big kind of insight here, and then we'll move on to the next stock. Long-term growth thesis. We had a Barron's analyst from early 2024, right, pre-Q2 results, of course, anticipated a robust expansion, which they are expanding. He basically said that there's 66% revenue growth by 2028 if they can hit $1.3 billion, essentially, with EBITDA, right, EBITDA, earnings before interest, taxes, depreciation, and amortization, that's what it stands for, reaches $150 million, okay? That would represent a scenario where Sweetgreen scales successfully and boosts efficiency. Okay, we'll talk about those numbers in just a moment and what that means for the market cap, because that's what we care about, right? As investors, we want to know how many dollars are we putting in and how much do we get out, right? Sorry if this is taking me a little bit longer. I'm just trying to do a deep analysis and teach you a lot of new things. So look, they've also developed AI-driven labor optimization and brought in a new COO with robust restaurant operational experience. He was formerly from Chipotle and Pizza Hut. So this guy's going to enhance consistency. If you can think about it, all of America is basically like a conveyor belt. How do we get those pills out to you, like doctors, right? How do we get those pills so these sick people to make a lot of money on them? How do we get goods into Walmart real quick so all these people can save money and buy this real fast, right? How can we make pizza as fast as possible so a bunch of people can eat pizza, right? That's what America is, just a conveyor belt. It's not really about quality or anything like that. It's about how much money businesses can make, and that's like one of the biggest factors in America, right? It's very, very capitalistic for good and for bad, right? Good or bad, right? I'm living in Eastern Europe. I kind of look at America and I'm like, interesting. So look, the company is actively expanding, opening at least 40 new stores this year. And with the COO who's focusing on consistency, this is going to be a very important factor because can they scale? We get it. They're not making a whole lot of money, but can they scale? Can they have more stores? All those stores make salad more popular. It's a longer term bet. Like this is a bet for 2028, like next 3 years or so, right? So 20 of those stores out of 40, by the way, will incorporate infinite kitchen technology. So why should you care as an investor? Why should you invest, or should you even invest? Well, if Sweetgreen reaches $1.3 billion in revenue with EBITDA of 11 to 12%, right now they're at zero, right? Can they get to profitability, which they should be able to? It transforms from a money-losing salad chain into a scalable, profitable, fast casual platform. So do you want to bet that more people will like healthy food like salad? I want to bet yes, because I feel like I'm betting on something positive in the world rather than a bunch of garbage fast food chains becoming more popular. I want to believe that people will take their health more seriously and more people will be eating salad and healthier food and less processed food. And that is a trend that I personally want to believe in, right? So that's also another reason I'm personally investing, is because I think it's a good money-making opportunity, but also I hope my view is correct that more people will want to be healthy in America. So at a 20 times EBITDA multiple, by the way, that would basically make the $150 million that they would make into a valuation of $3 billion, right? So that is kind of what I'm looking at. I think the company can be worth $3 billion. So if I scroll down here, interesting how the layout kind of changed here for Yahoo Finance, but let's take a look at the current market cap. It is $1 billion. So I do think we have a 3x potential, right, if things go according to plan in the next 3 years. So 3x in 3 years, I would say that's pretty good. So can it be a $27 stock? Yeah. I mean, even if it's a $20 stock in 3 years, pretty good return with a small amount of my capital. Okay. I have a lot more to say, but I see that we're getting kind of, we spent enough time on this. So let's go into the next stock, which is going to be Archer Aviation. So Archer Aviation, ACHR, okay, this company, it's a very interesting one because made a lot of money on it actually. I'm up 30%. I don't have a large position, but I have a very interesting position where I have 5,000 shares and $10 covered calls on ACHR. So these covered calls expire in 2 months from now, and I've actually made really good money on the covered calls themselves. So I'm up 9K on the covered calls and up 10K on the stock itself. So it's been a really good, portion of my portfolio. Again, small position. What I like about Archer is specifically that they're in the eVTOL market, which is electric vertical takeoff and landing. And the industry is projected to grow about 35% annually through 2030. So we got a long runway of a positive trend. Again, I like positive trends. AI is a big one. That's why I invested in Palantir a while ago. SoFi, Tesla. I've been investing for a decade now, over a decade. You can see, I got that experience under my belt and grown the portfolio tremendously, right? In the short term, it doesn't, I don't really look at short-term things. I look at long-term, how do we build wealth, passive income, so we can have that amazing cash flow and live life in terms of freedom, right? So that's the most important thing. I think that Archer will be a $12 to $15 stock in a couple of quarters. It's not a big deal. Just wait it out, be patient. Again, not a huge position. I think the stock's going to do incredibly well. They have raised capital which is kind of like a little bit of a negative, and some investors are getting antsy and not patient, and that's fine. Those are like the bad investors. If you want to be a good investor, it takes time. It takes time to invest in the right companies. If you want to have like more of a, like, I don't want to even say, the word with starting with a G that basically says like for something is for sure, but because nothing in life is for sure, right? But if you want income while you're waiting for this company to develop, just sell options on it, covered calls. Like you can see, I'm up like 9K. Like that's all it is, right? So while you're waiting for the stock to come up, you just sell covered calls and generate income. So I think that companies raise money for many reasons, and Archer, basically they're looking to build factories. They're looking to invest in hiring more staff, stuff like that. They're looking to grow the business. Now look, they don't really have that much revenue, so it was funny, my Discord member asked me, Henry, like what's the earnings going to be like for Archer? And I kind of laughed a bit and I said, man, you got to do more research. You got to understand what you're investing in, because Archer doesn't really have any earnings. They're not really making any or much money at all. So this is very similar to, and I explained this analogy. It's like you have a nephew or a son that's in medical school, and your son in medical school is in the 3rd year, okay, and he's studying. You're like, well, what's he making? Like, dude, hold on, he's in medical school. He didn't finish yet. He's still studying. Like, you see what I'm saying? He has a bright future. He's going to graduate and make, 300K plus as a doctor or a specialist, right? A specialist can make, a dermatologist, maybe it's 400K, 500K and upwards, right? They can make massive salaries in their specialty, right? But right now, your son's in medical school. So like, what are you asking about his earnings for? He's not making much money. He's studying, right? Same thing with this company. That's kind of how I see it. They have lots of relationships and it will work out, but later, like not today. It's a 3rd-year medical student. He's still studying. He has to take classes, not working. He doesn't have time, right? So that's kind of how I see Archer as a company. All right, so just follow the money. If you look at defense spending, it's going up in all of countries. Like there's a lot of conflicts in the world right now. I think that's why Palantir is going to continue to do well. We see just a lot of tension in the world, whether it's the Middle East or in Europe or India, Pakistan. I mean, so many borders right now in other countries have like conflicts, and military intelligence is very important for all countries to have to defend themselves or to attack, defend, whatever, right? I don't have any sides, or I'm not political at all, but I'm just kind of trying to understand and invest in pockets that are growing. And I think governments need to defend themselves, and the money is clearly flowing into more defense. So if you look at Archer, a $900 billion US defense budget is shifting towards more autonomous drones, more defense contractors, and that's very favorable for Archer. It's very favorable for Palantir as well, which is not on my list of stocks right now that I wanted to cover, but it's extremely, extremely favorable. Now, next stock I wanted to cover and I wanted to look at is Shopify. I've mentioned Shopify. This is a very interesting company. I don't think enough people are talking about, and it deserves a bit more respect. This is a very good play. It's like mini Amazon. 1 month it's up 6%, 6 months it's up 10%. Nothing crazy. The market cap is already fairly large, and the PE is not low. But there's a lot to like about this company, because if you look at social media, right, social media is essentially one big funnel. It's one giant funnel. Every video that you watch, you're trying to kind of funnel your attention into something. And Shopify is kind of at the bottom of that funnel, right? So whatever you're watching, whether it's cat videos or investing videos or fixing a car video, right? Shopify can be at the end of that, where a lot of businesses operate on Shopify. So Shopify isn't just a website builder, it's a backbone of millions, I mean literally millions of online businesses. Over the past 10 years, the stock has skyrocketed over 3,000%, well over 3,000. So this is actually kind of like an NVIDIA stock. Most people don't even know about it. People are like, oh, well, what's Shopify? And it is powering the internet. It's a really powerful global e-commerce company with a market cap that is large, and they're going to continue to grow. In the US, about 16% of retail happens online. So Shopify is, basically they have a massive runway. Last quarter alone, Shopify gross merchandise volume which is their dollar value of all their sales, jumped over 20% and year over year to over $75 billion. That's huge. So why should you like Shopify? Well, it has a recurring revenue model. It has subscriptions, which is, again, revenue from subscriptions is the strongest form of business that you can have, point blank, period, for sure. There's another company called Stripe, right? So Stripe processes a lot of payments. So when you guys buy programs, right? So if you purchased my program on my Discord, or you've looked at other people's boot camps and monthly groups, it doesn't really matter. All the finance YouTubers, every single one that you are watching uses Stripe, and a lot of them now went on WAP, but WAP is they're using Stripe as well. So everyone really uses Stripe. Stripe is a payment processor, right? So they basically process payments. So when you buy a program, right, whether you buy my program or someone else's program, whether you get on a consultation call or you go through a webinar or whatever, right? Everyone here is selling programs, myself included. I love what I sell because I help people and I make money selling it, and I'm a coach as well, obviously. Everyone on YouTube is. Stripe will take 2.9%, right? So if a creator, for example, does coaching and he sells something for $1,000, $10,000, right? Let's just say $10,000, which is more expensive, very, very fairly expensive coaching program. Although I bought coaching programs for $25,000, $50,000 myself. And I buy that all the time because I invest in my own coaching and education. But Stripe will make 2.9%. So when someone sells something and purchases something, when there's a buyer and a seller for $10,000, Stripe will get $290. And that is the best form of revenue, because that's not a subscription, but that is directly profiting from the business in terms of a profit share, essentially. So there's so many businesses, and you have no idea how much these creators are making. Oftentimes, YouTubers can make 100K a month, 200K a month, 300K a month, right? If you look at some of the bigger creators on YouTube that you're watching, they have little monthly Patreons, but they have a lot of members. They could be 2,000 members for $50, which is $100,000 a month. And although they are using something maybe like a Patreon, I'm pretty sure Patreon also uses Stripe, right? So if you look at the backbone of payments, it's Stripe, and that's why they may go public soon, and they're making crazy amounts of money, absolutely crazy, because they're essentially kind of like a profit share. They take 2.9%. It's 2.9%, by the way, plus 30 cents per transaction. So when someone sells an ebook for $5, that 30 cents kind of eats into the creator's margin a bit more. So they're making even more money, essentially, when it's a low ticket item, like a little ebook or something. But anyways, I'm mentioning this because Shopify is a very strong business, similar to Stripe. These are two businesses that are backbones. They're backbones. So if you want to invest in a good business, you want to invest in a backbone business, right? Or a platform. Uber was really strong. Obviously, Amazon backbone, Nvidia as well, SoFi. SoFi is not a backbone, but yeah, I covered SoFi yesterday. You can check out that video. So anyways, I wanted to educate you on that because Stripe, I'm definitely buying Stripe. When they go public, I'm definitely buying it. Absolutely. Like I bought Palantir at IPO, I'm definitely buying that as well. All right, let's move on. We don't make this video too long. We got two more stocks to cover. SoFi. So, we made stupid amounts of money, absolutely ridiculous, stupid amounts of money on SoFi. And I think the stock is going to continue to do well. I talked about yesterday how it's kind of in that sleeper peak, which I explained. You just watched the video, but I'll keep it short. I explained that sideways action right now with no investor demand and no investors really purchasing the stock right now, with no real catalyst coming up in the short term. There's low interest, which makes a really good opportunity for an investor to purchase the stock. However, they are jumping into crypto, and that's going to be a very big catalyst in the near future for SoFi. I think they can double their market cap, and I've always talked about their flywheel and their LTV model, which is they have an amazing system of getting customers in the door, and they have also an amazing system of upgrading those customers to make more money from them. So that's kind of how a business makes money. It's customers multiplied by the amount those customers pay, right, equals revenue. So can you get more customers? Okay. And can you get those customers to pay you more money? And then that is your revenue, right? So you can get one customer to pay you $1 million. You can get 10 customers to pay you $100,000. You can get 100 customers to pay you $1,000, or sorry, $10,000. That all gets you to $1 million per year, right? But how do you optimize that? And how do you like improve on that? And how do you increase the amount of customers? And how do you increase how much they pay you? SoFi has figured it out. They are exceptionally well at acquiring customers at a low cost, because acquiring customers costs money, right? There's marketing. There's no real way to acquire a customer without some form of marketing. Either there's paid marketing, right? There's like ads and advertising, right, on social media, whether it's TikTok, Instagram, YouTube, etc., right? So there's paid and there's organic. So I do organic. I make YouTube videos for free, which shares my knowledge. Organic is very hard because you must be talented and actually good. Not everyone can just go on YouTube and make videos. Like, I'm qualified, I have a degree, I have a big account, I've been doing this for a very long time, so organic works for me, right? There's paid organic, and there's like word of mouth, there's like referrals, and there's like affiliates, and there's other forms to get customers. SoFi has figured out a very good way, which is paid. Paid advertising in a way is better than organic because there's a reach that you have with organic. There's only so many people you can reach. But with paid, you can like literally just buy your way into it the fastest way. Like SoFi has SoFi like stadiums, so they can buy into lots of eyeballs very quickly. So they have figured out how to acquire a lot of interest and a lot of demand from potential prospects and customers to get them in the door, right? Like low ticket stuff, or it's like APY products, really cheap stuff. So they have SoFi Stadium, they have partnerships with NFL and influencers, and they also have very SEO heavy content marketing, which would be more on that organic side, right? Hopefully this stuff isn't like too complicated. By the way, if you want more like deep breakdowns and analysis into stocks, this is what I do in my private community. In my private community, I am educating, I'm teaching, and I'm showing every single trade that I'm making. So if you have like 50K plus, it's the biggest no-brainer ever because you get such a huge ROI from my coaching, because I tell you like, hey, I'm doing this, I'm doing that. This is how you should invest, and I give you hands-on coaching and help. And like one trade like literally pays for the coaching. So I get it. It's not free. Yes, I understand, but it's well worth it. So I'd recommend that you check it out. There's lots of details as well. I'm very flexible. So I also do one-on-one coaching, but you can see all the pricing and the details and how that is structured by just clicking the first link in the description. You can look into that if you are interested. So again, customer acquisition for SoFi, very easy. And then once you're in with all these ways that they get you in, SoFi Stadium, NFL, influencers, heavy content marketing, then they have upsell. They have an upsell engine. Their engine is incredibly strong. So like a student, you come in under a student loan, right? Let's say you're like a young kid, right? Most of you guys are, I'd say, average 40, 50, 60 years old, right? People I work with. But let's say they get someone in for a loan, a student loan. They build that relationship, and then later on, they start to provide upsells, such as checking accounts, credit cards, more loans, refinancing, investing, and so on and so forth. So that's how they're really strong. And then they have a really strong email marketing. I'll talk about that in a second. Last talk I'm going to talk about is Robinhood. I just thought about it because Robinhood also has a very good customer acquisition as well as a very long-term life, right? So I've been on Robinhood since the very beginning, and my account has grown significantly. And I'm a big user of Robinhood, right? So I pay for gold, I pay for lots of things on Robinhood. So they're making good money off of me, right? And they also manage my money. So of course they make good money from that. So before I wrap it up with Robinhood, last thing I want to say about SoFi is they have amazing automated re-engagement with their email marketing. So email marketing is incredibly important to keep in touch with your customers and to make more potential customers. So they're very good at that. All right, so last but not least is Robinhood. So obviously I've been using Robinhood for a very long time. I make lots of YouTube videos. I do not get paid from Robinhood. I'm not sponsored by Robinhood. So I've actually indirectly made Robinhood probably like millions of dollars because my videos have gotten millions of views over like the lifespan of the YouTube channel. And I use Robinhood, so a lot of people sign up for it. So it's kind of funny. I should have invested in Robinhood from the very beginning since I do free marketing for Robinhood. Like they literally had me as a free influencer, I guess. But the stock is up tremendously. It's a really strong stock to invest in. And I would say that Robinhood is a company that also has figured out how to acquire customers and make a lot of money from customers. This video is getting long, so I'll wrap it up. I will make a more detailed analysis on SoFi and Robinhood in my next video. Make sure that you're subscribed. Check out more information about my coaching and schedule a free consultation. Costs you nothing, no pressure. Just look into it. And I'll catch you in the next video.